While you were sleeping, 20% of the world's energy supply vanished from the market. Not gradually, overnight. Since February 28, 2026, the Strait of Hormuz has become the world's most expensive parking lot. Supertankers queuing, insurance premiums tripling, energy markets in freefall. While global attention was fixed on Eastern Europe, the real heart of the world's energy system quietly stopped beating. 17 million barrels per day, gone from the market in 72 hours. What makes 2026 different is the Dual Blockade structure. Iran has deployed naval assets to restrict commercial traffic through the strait itself. Not a threat. An active deployment. Simultaneously, U.S. naval forces established a counter-blockade around Iranian port infrastructure. 2 blockades, 1 strait, almost no room for commercial shipping to operate safely. This is the largest disruption to world energy supply since the Arab oil embargo of 1973. The 1973 crisis lasted 5 months and caused a global recession. The 2026 deadlock shows no resolution pathway. The economic transmission is immediate. Within 3 weeks of February 28th, European gas prices doubled. Asian LNG prices tripled. Aviation fuel surcharges made transatlantic flights 40% more expensive. This is a planetary problem. To understand why this strait is so difficult to reopen by force, you need its precise geography. The Strait of Hormuz is 33 kilometers wide at its narrowest. The navigable shipping lanes are approximately 3 kilometers wide in each direction. 3 kilometers, the width of a large city park. Supertankers navigate that corridor with minimal margin under normal conditions. Under military threat conditions, that corridor becomes a kill zone. Iran's asymmetric strategy doesn't require a naval battle. Mines, drone swarms targeting navigation systems. IRGC fast boats that can strike before a carrier group responds. The cost of disruption is vastly lower than the cost of defense. In March 2026, a single tugboat was sunk in the inbound shipping lane. 1 civilian vessel made the lane impassable for 11 days. $50 billion in delayed cargo. 1 small boat. 11 days. The United States operates the most powerful naval force in human history. None of that power can safely escort a supertanker through a mined, drone-surveilled 3-kilometer corridor without catastrophic risk. That is the fundamental Hormuz paradox. The silent strategic loser in the 2026 deadlock is a country with no military presence in the region. China imports approximately 28% of its liquefied natural gas through the Strait of Hormuz, primarily from Qatar. That supply is now severely disrupted. Chinese LNG shortfalls translate into factory curtailments. Factory curtailments translate into export delays. Export delays translate into supply chain disruptions felt globally within weeks. China's Hormuz problem is everyone's problem. This connects to China's near-Arctic state strategy we covered previously. The Polar Silk Road, Arctic LNG projects, Central Asian pipelines, Beijing's search for alternative energy routes reflects a structural vulnerability the 2026 crisis has made undeniable. Qatar faces an impossible position. Its LNG terminals are fully operational. Its customers are desperate. Its only export route is blocked. Qatar's revenue has been held hostage by a military standoff it had no role in creating. 2 pipelines exist specifically to bypass the strait: Saudi Arabia's East-West Pipeline and the UAE's Fujairah export terminal. Both were built precisely for this scenario. Neither is sufficient. The Saudi pipeline moves approximately 5 million barrels per day. The UAE Fujairah line adds 1.5 million. Combined, 6.5 million barrels daily. The strait normally handles 17 million. The shortfall is 10.5 million barrels every single day. Both pipelines are already operating at near maximum capacity. They cannot be expanded overnight. New pipeline infrastructure takes years to build. The world designed its energy architecture around Hormuz. There is no quick bypass. Strategic petroleum reserves provide temporary relief measured in weeks. The 2026 deadlock is already measured in months. Reserves are a painkiller. They are not a cure. By April 2026, 3 separate diplomatic tracks had failed. EU shuttle diplomacy, UN Security Council resolutions vetoed. Then Islamabad offered something unexpected. Pakistan's position is uniquely suited to mediation. It borders Iran. It has deep relationships with Gulf states. It has strategic partnerships with both China and the United States simultaneously. No other nation holds that specific combination. The Islamabad talks opened in May 2026. Iran demands sanctions relief before any strait reopening. The U.S. demands strait reopening before any sanctions discussions. Both sides demand the other move first. The logical deadlock is complete. Whether Islamabad produces a breakthrough depends on whether both sides face sufficient economic pain to move from opening positions. That calculus is changing weekly as costs accumulate on all sides. The 2026 crisis has demonstrated something geopoliticians theorized for decades. A choke point does not need to be permanently closed to destroy the global economy. It only needs to be credibly threatened. The dual blockade paradox has no clean resolution. Strait stays closed. Western recession accelerates. Strait opens. Iran regains revenue that funds its regional strategy. Both outcomes carry enormous strategic costs. What the 2026 crisis permanently changed is the psychological relationship between energy markets and Hormuz. Before February 28th, the vulnerability was theoretical. After February 28th, it is institutional memory. That memory will last decades. 33 kilometers, 3 kilometers of navigable lane, 17 million barrels per day. The 2026 crisis did not create this vulnerability. It simply showed everyone simultaneously that it was always real. With oil above $120 per barrel, the pressure for military action is building simultaneously in Washington, London, and Tokyo. The question is whether the cost of military action is now lower than the cost of continued closure. That calculation gets closer every week. With oil at $120 and climbing, do you think the U.S. will risk direct military confrontation to force the strait open? Or will the Islamabad channel produce a framework first? Drop your analysis in the comments. Subscribe to GeoMind Studio, because this story is not over.